Great. Now, if you look at what we are doing, we're looking at method number 2, that is absorption costing. So under absorption costing, you must include the fixed production overheads to be part of the product cost. You must include the fixed production overheads to be part of the product cost. So how did we come up with the fixed production cost per unit? Remember, we are doing production. So number one, you were given the budgeted overheads, which was 4,200,000 for the entire year. Then number two, we were told that at full capacity or normal capacity, the company is supposed to produce how many units? So we have overheads, budgeted overheads, or budgeted fixed production overheads divided by budgeted activity level, which happen to be budgeted units. So from this, you'll be able to get what we call overhead absorption rate, which of course is the fixed production overhead per unit. So the 4,200,000 divided by 140,000, this gave us, was it 30 shillings per unit? Was it 30 shillings per unit? Yes. So the 30 shillings per unit, we add to the marginal cost or variable cost. Do we have variable cost? The variable production cost. All the variable production cost put together will give us what we call marginal cost. So here we have direct material, direct labor, direct production cost to give us what we call prime cost. To the prime cost, we add the variable production overhead. So in our question, the examiner already consolidated the 3 items I've mentioned, or the 4 items I've mentioned, to give us what we call total variable production cost. So this gave us a figure of 120. So how do we get absorption cost? Absorption or full production cost per unit. Full production cost per unit. You take the variable production costs, add to the fixed production overheads per unit. And that gave us 150. That's how we came up with this production cost of 150 shillings per unit. Now, under the production, in period 1, the company managed to produce 75,000 units, which of course, at a cost of 150, gave us 250,000. So can we now go to this period 2 and check what we can do about it? So under period 2, the company managed to produce 65,000 units. But even before we go to the 65,000 units, can we first of all work on the opening stock? These are production happening in period 1, period 2. These are periods that are following each other. Let's say Monday, Tuesday, January, February. So this is the first period, the first 6 months. Then the second period, the last 6 months of the year. So whatever is here as the closing stock of period 1 will be the opening stock of period 2. So now from what I have on the board, from what you are able to do on your own, what are we going to have as our opening stock in period 2? How did we get 120? That was given directly from the question. If you look at this question, please open this question. Can we open that question first? Can we open that question? Before we do anything, please open the question. I'll give you a whole minute to open the question. So please, let us just proceed at 6:20 once you have the question. Good. So we have said our closing stock of period 1, which is 2250, is our opening stock of period 2. We have been able to bring it to this part. Let's now go to the production. In period 2, the company managed to produce 65,000 units, and the cost per unit is 150,000. So what is our total production cost in period 2? What is our total production cost in period 2? Somebody? Total production cost in period 2, we are having 97.50. That is according to 𝗔𝗃𝗄𝗃 here. That's according to 𝗔𝗃𝗄𝗃. Good. So we have a total of 97.50,000. So I'll bring that here. 97.50,000. Good. To the 97.50,000, that is our production cost. We need to less the closing stock. Okay. We need to less we need to less the closing stock. So how do we address the closing stock? Do we have opening stock? Opening stock in period 2 is the closing stock in period 1, which is how many units? 15,000 units. So the 15,000 units, we add production. The company managed to produce 65,000 units in period 2. So that's what we bring here. So opening stock plus production. So that will give us goods available for sale. So the goods available for sale, I can see we have a total of 80,000. Only to realize that the company managed to sell only 70,000 units. So the sales that were done for that particular period is 70,000 units. You have 80,000 units to sell, and you only sold 70,000. Is there something that is remaining? If yes, then that's what we refer to as the closing stock. That is what we refer to as the closing stock. Are we able to confirm the quantity of our closing stock? The quantity of our closing stock, somebody? You have 80,000 to sell, you've only managed to sell 70. So that leaves us with 10,000. That leaves us with 10,000 units. That leaves us with 10,000 units. Remember, we said an assumption. So someone is joining us today for the first time. Of course, you've definitely gone through the video. And if not, you'll find it in the videos. But in the process of emphasizing what you're supposed to understand there, please put this down. Indicate that we are working under the assumption, right? We are working under the assumption of FIFO method. So in FIFO method, this company made sales of 70,000 units, and we have been able to see we have opening stock of 15,000 units. This is the policy. The opening stock will be sold first before we sell the new production. That is to say, out of the 70,000 units that were sold, 15,000 is part of the opening stock. The new production is also partially sold, and part of it is what you're going to have as the closing stock, which means the entire closing stock is from the production during the period. The entire closing stock is from the production during the period, and that is what we have here. So it means as we get our closing stock, which you already know is now 10,000 units, we multiply by the production cost per unit. I am not able to see the board. Wow. Does that apply to everyone? Are you able to see the board from your side? Are you able to see the board from your side? So maybe check on your network, please. Check on your network. Check on your network. Good. So let's proceed. Can you now give me the value of closing stock in period 2? You take the 10,000 units, multiply by the production cost per unit. That is 1,500,000. 1,500,000. 1,500,000. So the 1,500,000 deducted from production and opening stock will give us cost of sales. So what is our cost of sales for period 2? Cost of sales for period 2. Cost of sales. People are letting me down. 2250 plus 9750 minus 1500. What are we getting? $10,500,000. So we have 10,500,000. Now the 10,500,000 When you deduct it from the sales, we'll be able to get what we call unadjusted profit. So can you bring the unadjusted profit? What is our unadjusted profit? 3,500,000. 3,500,000. To the 3,500,000, we need to consider what we call we need to adjust. Remember, what we are getting is unadjusted gross profit. Why is it unadjusted? Because we've not been able to factor in the over or under absorption of the fixed production overheads. Remember, as per the budget of the company, they budgeted to produce 140,000 units, and their budgeted cost is 4,200,000, which means they budgeted 30 shillings per unit as the fixed production overheads. That is, if only the company will manage to produce 140,000 units. Is it true that the company managed to produce the 140,000 units in period 2? The answer is no. They only produced 65,000 units. So that will result to either over or under absorption of overhead. So how do we do that? First of all, you need to give us the actual fixed production overheads. Do we have actual fixed production overheads? Yes and no. We were not given a direct actual fixed production overheads, but there is an additional information which is telling us the actual fixed production overhead is equivalent to the budgeted fixed production overheads, which means the company has got budgeted fixed production overhead. So we are told to take that as the actual, right? We are told to take that as the actual. If the examiner is silent about the actual and we have not been given the actual, you take budgeted as the actual fixed production overhead. So that's what we have here. Why are we taking 2,100,000 yet we are talking about a cost of 4,200,000? 4,200,000 is for the entire year. This year has been split into two, right? Period 1, period 2 of equal months. Then there's another information the examiner is telling us. These expenses were evenly distributed throughout the year. So if I have 4.2 and I'm having two durations, I'll divide that by 2 to give us 2.1. That's why we are having 2.1 instead of 4,200,000. I hope these things are making sense to somebody in this meeting. Good. Let us go to overheads absorbed. The overheads absorbed, we want to absorb these overheads into the production process. So we have overhead absorption rate as 30 shillings per unit. How do we get overheads absorbed? So overheads absorbed is equal to overhead absorption rate multiplied by actual units produced. Do we have overhead absorption rate? Yes, it is 30 shillings per unit. How many units were actually produced under period 2? Actual production in period 2, I can see we have 65,000 units. So when you take 30 by 65,000, what are you getting as your overheads absorbed? What are you getting as the overheads absorbed? 1950. So the overheads absorbed into the production process is 1950. Is 1950. Good. The actual fixed production overheads is 2,100,000. What was taken into the production cost is only 1950. Do we have over or under absorption? Do we have over or under absorption? It was under absorbed. So we have under absorption of the fixed production overheads. When you have under absorption, it means you have understated the fixed production overheads. You have understated the expense. Understatement of expense leads to exaggeration of the profit. It exaggerates the profit. So how do we get back to the real profit? We less the understatement. We less the understatement. So the difference between these two should give us a figure, which I want you to give me. The difference between 2100 and 1950. That is 150,000. So what have we said to the 150,000? We deduct. That is understatement. So we deduct to get the real expense. So when you take 33,500,000 minus 150,000, what are you getting? 3,350,000. So that is 3,350,000. That is now the adjusted gross profit. To the adjusted gross profit, we need to less number one, actual selling cost or actual selling overheads. The selling overheads are dependent on the units sold, not produced, are dependent on the units sold. So in period 2, the company sold 70,000 units. And the variable selling cost per unit, I'm told, is 10 shillings per unit. So how much will we have as the actual selling or variable selling costs? You take the 10 shillings per unit, multiply by 70,000 to give us 700,000. I hope someone is able to see what we are talking about. I hope we are moving with majority or everyone, if possible. Great. Let us go to the fixed non-production costs. One of the fixed non-production costs is the selling cost. Our selling cost, again, the examiner said the budgeted selling cost or fixed selling cost is equivalent to the actual selling cost. So we take that budgeted as the actual as per the instruction of the examiner. We have a figure. If you look at your question, we have 2,800,000. Where are we getting this 1.4 from? The 2,800,000 is for the entire year. So if you have the first 6 months of the year to be period 1, the last 6 months of the year to be period 2, and this expense is distributed evenly throughout the year, then definitely we take 2.8 divided by 2. And that is what gave us 1.4 in period 1. In period 2, since they are going to be equal, we will be taking that as our actual fixed selling overheads. Good. When you adjust those two items, you should be able to give us now the net profit as per absorption costing for period 2. Net profit as per absorption costing, is it 11 or 1250? So that's 1250. $1250,000. Good. Just for us to be able to connect the two, because the next thing is, can you explain to us why we have the difference? So, what were you getting as the net profit for period 2 under marginal costing? What was your net profit for period 2 under marginal costing? What was your net profit for period 2 under marginal costing? You are getting 1,400,000. So I have a very simple question to you. Why is it that we are getting different net profit under the two methods, yet we are using the same data? If it is opening stock, that is the quantity. If it is sales, that is the revenue. Why are we getting different net profits under the two methods? The answer to that question, why, will be answered by coming up with what we call a reconciliation statement. This reconciliation statement will have two sides. You can start from the marginal costing or the marginal net profit and tell us about the understatement. Or you can start from the absorption costing and talk about the overstatement. And that is what I want us to address to answer the question why we have different net profits under the two methods. Because of space, I'll be forced to do away with my data. But for your case, you will always refer to what is there. That concept will be understood when I give you a demo here. Let me do a demo here. We want to see how opening stock and closing stock will be affecting our net profit. That is what I mean, gross profit. So let's talk about default. So let's talk about maybe demo. I'll talk about demo. So this demo here, we have sales. I just want you to listen. Of course, you can also put it somewhere there for your reference. So I have sales, which is constant. Our sales is 7,000. Then we have cost of sales. So under cost of sales, I'll have opening stock. Then we can even bring purchases. Forget about production. Purchases. Then less closing stock. Right? Now, our opening stock, let's talk about 1,000. Let's talk about 1,000. Our purchases, let's talk about 5,000. Our closing stock, let's talk about 700. Good. So what is your cost of sales? It is opening stock and purchases less closing stock. So what is your cost of sales? What is your cost of sales? 50. 700. Hiyo umeniangusha. Opening stock 1,000 plus 5,000, that is 6,000. Minus 700. Minus 700 can never be. So that is 5,300. We all know this one will be less. I can even put it in negative, maybe for your reference. So 5,300. 7,000, the sales minus 5,300. What is your gross profit? Gross profit is 1,700. That is the real gross profit. I want us to introduce a problem. Remember, I've said you can pick it from the absorption costing part or pick it from the marginal costing part. For uniformity, I want us to pick it from marginal costing part. So let's talk about understatement. Let us look at how understatement of the opening stock will affect this profit. That is, I want us to reduce this opening stock. That is the understatement I'm talking about. So our sales will still be the 7,000, right? Our cost of sales. So our opening stock, I want us to understate the opening stock by, so opening stock, I want us to have 500 there. Then purchases, I want us to retain the purchases figure. Closing stock, I want us to retain the closing stock figure. Let us not interfere with the closing stock. What will be your cost of sales? 4,800. Yes, 4,800. Good. So what is your gross profit? Gross profit 2,200. Gross profit ni ngapi? 2,200. So we have what we call understatement of opening stock. of opening stock. This is the problem. Understatement of the opening stock. Someone who is following this should be able to give us the answer like immediately. We have been able to understate our opening stock. We have been able to understate our opening stock by 500. When you understate the opening stock by 500, what happens to your profit? Is it increased or reduced? When you understate opening stock, what happens to the profit? There's an increase in profit, right? There's an increase in profit just because you've intentionally understated your opening stock. So how do we rectify this problem? In other words, what do we do to the understatement? Do we add or less? Understatement of opening stock. We add, right? So when you are putting your notes, I want you to write somewhere. I hope you have somewhere notes, the shortcuts that you'll keep on remembering, which of course you'll not find in the notes, right? So add understatement of opening stock. Add understatement of opening stock. Have you done that? If yes, indicate done, 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 done. That will save you. I want to give you a shortcut. Ile siku ya exams, utakuwa unafikiria vitu mingi. Done, done. Somebody is requesting for a break. Can we do it at can we do that break at 7 so that after the break we come back to topic number 8? Will that make sense? Okay, so let's have a 5 minutes break. Good, so I want you to put this down. We said our real profit was 1,700. When you reduce, when you understate your opening stock, then the gross profit will be exaggerated by the understatement. So how do I get back to my real profit of 1,700? You've told me we add understatement of opening stock. Our opening stock was understated by 500, right? So it has given us a profit of 2,200. How do we get back to the gross profit, the real gross profit? Are we supposed to add really? Please look at it. For you to get back to 1,700, are you adding the 500 that was understated, or you are deducting the 500 that was understated? Are we really adding? Make me understand. Make me understand that. Make me understand that. We less the understatement. So we don't add, we less understatement of opening stock. So when you take now 2,200 minus the understatement of 500, it takes us back to the real profit, which is 1,700. Understatement of opening stock. Good. I'll be able to bring that when we now proceed. Now, can we do away with the understatement of opening stock? Right? Just to explain, now we get our real opening stock of 1,000. But I want us to understate the closing stock. So instead of 700, let us have a closing stock of 300. Instead of 700, let us have a closing stock of 300. What will be the cost of sales? What will be the cost of sales? You can't add the opening stock and recalculate. Si tukichukua hii 500 turudishe hapa kwa ile opening stock, it will be 1000. So 1000 of opening stock, purchases 5000 minus 700, it will take us back to 1700. So since you don't want to redo the same thing up there, you just adjust to the understatement of opening stock. So that gross profit is what we do what? Is what we adjust there. Good. So what will you have? Cost of sales 1000 plus 5000, that is 6. Minus 300, that is 5700. So that will give us 1300, right? That will give us 1300. Remember, we are now talking about understatement of closing stock. Understatement of closing stock by 400. Our closing stock is 700, but we have indicated 300. We have understated our closing stock by 400. When you understate closing stock by 400, you get gross profit of 1300. But the real gross profit is 1700. What should I do to the understatement of closing stock? What should I do with the understatement of closing stock? What do I do to the understatement of closing stock? We add back. We add back the understatement. So, is it true if I come to this gross profit and say I want to add the understatement of 400, will it give me the original gross profit? The answer is yes. So, we add understatement of closing stock. We less understatement of opening stock. That is, if you start from marginal costing. If you start from marginal costing, we'll be talking about these understatements. If you start from marginal costing, you will be talking about the overstatements. That takes me to what we call a reconciliation statement. I want us to put what we have learned there into writing. I want us to put what we've learned there into writing. It's very unfortunate I've been forced to do away with that data, but we are now coming up with what we call reconciliation. Reconciliation statement. So we'll be having period 1. Period 2. Now, period 1, period 2, we are starting with what we call net profit as per marginal costing. So net profit as per marginal costing. Can you give me net profit for period 1? As per marginal costing, what was our net profit? As per marginal costing, what was our net profit for period 1? 700,000. For period 2, what was our net profit for period 2? Under marginal costing? 1,400,000. 1,400,000. We have said something must have happened, right? So net profit as per marginal costing, we have said we look for understatement, right? All this will be understatement. Understatement of opening stock. Then understatement of closing stock. Understatement of opening stock. understatement of closing stock, understatement of opening stock and closing stock. Now, when you get to understatement of opening stock, were we having opening stock for period 1? Were we having opening stock for period 1? So is there any understatement? No. Because we are not having opening stock for period 1, understatement will be a dash. Okay. Let us go to still period 1. Were we having closing stock? Were we having closing stock for period 1? Closing stock for period 1? If yes, respond by giving me the quantity there. Respond by giving me the quantity. Respond by giving me the quantity of the closing stock. 15,000, right? 15,000. So we add 15,000 units. And as per marginal costing, it was 15,000 by 120. As per absorption costing, it was 15,000 by 150. So this one is giving us, is it 1.8? 1,800,000. How about 15,000 by 150? Was it 2250? $22.50. Good. Why is it that we are having different values of the closing stock in period 1, yet the quantities are the same? The difference is coming from the cost of these goods, the production cost per unit. Here we have 150, here we have 120. Do you know what is missing? Do you know the missing item, why we have this difference? In one method, the fixed production overhead is included. In the other method, the fixed production overhead is not part of the product cost. That understatement is as a result of not including the fixed production overheads in the marginal costing system. In marginal costing system, the fixed production overhead per unit, that 30 shillings per unit, is not included. And not including that to the openings, to the closing stock, is basically understatement of our closing stock. What is the actual figure for the understatement? We have not included 30 under the marginal costing because here we have 120, here we have 150. It has been understated by 30 shillings. So it is 30 shillings. That is the understatement per unit, and there are 15,000 units. What is the total understatement? 450,000. 450,000 is the understatement of closing stock for period 1. Why? Remember, I've said we are starting from the marginal costing. If we could have started from the absorption costing, we'll change this to overstatement. Right? Good. What did we say about the understatement of closing stock? Do we less or add? I told you to put a note somewhere. What do we do to the understatement of closing stock? Do we less or add? We add the understatement of closing stock. So this will be in positive form. We add understatement of closing stock and we less understatement of opening stock. Now, let us go to period 2. Do we have opening stock in period 2? Do we have opening stock in period 2? And how many units? How many units? The 15,000 units that we have as closing stock in period 1. Now, the 15,000 units still under marginal costing. This opening stock will be valued at 120 per unit. Under absorption costing, the same 15,000 units will be valued at 150, right? So again, we still have understatement, that is 30 shillings by 15,000 units. That will give us the 450. In other words, what you have as the understatement of the closing stock in period 1 will become our opening stock in period 2. So just have this figure and bring it here. But the name has now changed. The name has now changed. The name has now changed. Under this part, it is closing stock. Under this part, we are now referring to it as opening stock. What did we say you are supposed to do to the understatement of opening stock? Understatement of opening stock, you less. So we are going to deduct this for 50. Right? Good. Let us go still to period 2. Do we have closing stock in period 2? Do we have closing stock in period 2? How many units? I'm only interested in the units, the quantity. How many units? 10,000 units. The 10,000 units, of course, is applicable to marginal and absorption costing. So under marginal, they will be costed at 120. Under absorption, at 150. We still have under statement of closing stock in period 2 of 10,000 units. And that understatement is as a result of not including the fixed production overhead per unit. So how much is that? 10,000 by 30. 10,000 by 30? 300,000, right? So we bring 300,000 here. And we have said, understatement of closing stock is added. Understatement of closing stock is added. I don't want you to be lazy, but I hope someone has been able to see a loophole there. Somebody has been able to see a loophole there. This loophole is whatever is causing all this understatement is the fixed production overhead per unit. Right? So if I have marginal or net profit as the marginal costing, I don't need to go through all these procedures. No. Get the quantity of our closing stock in period 1, 15,000, times the fixed production cost per unit, 30. 15 by 30, it gave us 450. You are not having opening stock in period 1. Come to period 2. Opening stock, 15,000 units. Fixed production cost per unit, 30. 15 by 30, 450. Go to the closing stock in period 2. Our closing stock is 10,000 units. And we have not included fixed production overhead under marginal costing system. So that is the understatement. 30 shillings per unit times the units, 10,000. That is 300,000. That's how we get it. So don't struggle going through all these procedures. No. That is the shortcut you're supposed to take care of. Good. So let us now get our answers column-wise. What are you getting? 700,000 plus 450. 700,000 plus 450. $1,150. Then period 2. What are we having for period 2? So 1,400 minus 450 plus 300 is giving us 1250,000. Good. Now, if you look at your workings from Friday to today, the two statements, the income statement under marginal costing, the income statement under absorption costing. Are you able to see these figures appearing somewhere? If yes, they are net profits as per which method? They are net profits as per which method? Those are the net profits as per absorption costing. So, net profit as per absorption costing. The net profit as per absorption costing period 1, it is 1150, 1250. So this difference, marginal costing was giving us 700. It was because of the understatement of closing stock of 450,000. Then period 2, we were getting 1,400,000. It was as a result of two things: understatement of opening stock, understatement of closing stock. When we now do the two adjustments, we are getting the net profit as per absorption costing. Anytime you get to an exam room and you are told, kindly explain to us the reason for the difference in net profit under the two methods. Don't even use a lot of words. If you have a question there, come up with a conclusion statement. I'll give you your full marks without even wasting time. We are saying, explain to us why we have the difference, or where there's a difference between 700,000 and this as per the two methods. When I see the reconciliation statement and it is correctly done, I don't waste time. But if you want to write a whole paragraph explaining to us why there is difference, we'll consume the whole day doing that, right? Kindly explain additional information number 7. Wacha tuone hiyo number 7 inasema nini? Additional information number 7. Additional information number 7. The fixed production costs and selling and administrative costs incurred during the year were equal to budget. I said you are supposed to look for actual fixed selling and administrative costs. Actual fixed production overheads. Actual administrative costs. If you are not given actual, you take budgeted as the actual. But in the question, the examiner said the budgeted were equal to the actual. Walisema they are going to pay 4,800 per unit. When you came to RCM to study your management accounting, you are actually charged 4,800. What you budgeted for is equivalent to what you've actually incurred. If you budgeted to spend 4,800, but when you got to RCM, they gave you a discount and you paid 4,000. In that case, you pick the 4,000, not the budgeted. So we are picking that budgeted because we have been told it is equivalent to the actual fixed overhead. Good. Does that make sense to somebody? Does that make sense to somebody? Yeah. So that is it. That marks the end of topic number 7. You don't have a lot there. Yeah. Just knowing what I've explained. And this is a perfect question for us. It has factored in all those things that I wanted us to look at, especially the under and the understatement of both opening and closing stock. How do we come up with the income statement under the two methods? Now, the good part of it, I've been able to go to the past paper questions. I've looked at the questions under topic number 7, where you are required to do marginal and absorption costing. So once you are done with this in class, it is upon you to go to the discussion group where you normally discuss, identify another question from the summary. Do it in that group. Once you are done, you'll be able to compare notes. Should you find that you are not satisfied with the answer, then keep it for our reference, right? Keep it for our reference. That is what you will be doing. Yeah, so that is it. I think that is the end of topic number 7, and we should be moving to topic number 8. Any question for me? Any question for me? Any question for me? So that is what we have. Any question before we get to topic number 7? Assignment, just pick any of the questions from the past papers there. But of course, I would prefer you look at which one. It must be from Can we first digest topic 7, then start topic 8 on Friday? Okay. 10. We have everything recorded. We have everything that is recorded there. This ninja is already tired. This ninja is already exhausted. This ninja is already exhausted. So let me see what we can do. Let me see what we can do. Somebody suggesting December. Can we, let me see if we have just one duration. Yeah. Let's have one more question, please. Then let's look at December. What has been suggested there by one of you? December 2023. CPA, December 2023. Very fast, very fast. Very fast, very fast, very fast. CPA, December 2023. CPA, December 2023. Very fast, very fast. Very fast. So we have CPA, December 2023. Question number 4. Question number 4A, right? So we have good. So we have details or sales, and we can start with marginal. Under marginal costing, we have sales. We have sales. So the sales figure, are we given sales? Are we given sales? That is Melter Limited has just completed the first year in operation. The unit cost and selling prices based on absorption costing basis are as follows, based on absorption costing. So we have selling price per unit. Are you able to see it? Are you able to see the selling price per unit? Are you able to see the selling price per unit? What about the quantity sold? What about the quantity sold? So additional information number 2 is giving us units sold 21,300. Then the first table down there is giving us standard selling price of 5,000 per unit. When you take 5,000 by 21,300, what are you getting? 5,000 by 21,300, what are you getting? Is it 10 million? 650,000 or 1,106,500,000. So maybe you can do them in thousands. Is that viable? We can do them in thousands, maybe. Or we can have 106,500,000, the whole of it. 106,500,000. Then we need to take care of cost of sales. So under cost of sales, we need opening stock. Opening stock. Don't need to put that now. So opening stock tuko nayo. Opening stock. Opening stock, do we have that? Any information touching on the opening stock? Okay, so there's no opening stock. That is 0. Then we add production. So add production. Add production. So under production, how many units were produced? Actual production. Additional information number 2, 24,000. What is the production cost per unit? Production cost per unit. So under marginal costing, we need direct material per unit, right? So 2 kgs at 350 per kg, we are talking about 700 direct material plus direct labor 0.5 hours at 1600, that is 800 shillings per unit. Then variable production overheads, we have 0.5 hours at 600, giving us 300 shillings per unit. Then I can see the fixed overhead. So the fixed overheads cannot be part of the marginal cost. We only stop at this point. What is our marginal cost per unit? Marginal cost per unit? Marginal cost per unit, 1,800. Then absorption costing. Absorption costing, we have the 700 plus 800 plus 3,000 plus the fixed production overhead per unit. How much is the fixed production overhead per unit? 450. So bring the 450. I was bringing this to make you understand how it is done, but already the examiner gave us that figure as 2250. Tuko pamoja hadi hapo. So when you now come to give us the production, the company produced 24,000 units at a cost of 1,800 per unit. Remember, we are using marginal costing system. So please give me your total production cost. Total production cost. Total production cost. Okay. 432 million? 43,200,000. So we have 43,200,000. Okay, then we less closing stock. Our closing stock, you opened with 0, you produced 24,000, you have a total of 24,000 to sell. Then we only find that you made sales of 23,100. The difference represents closing stock. How many units is our closing stock? How many units is our closing stock? 24,000, 23,100. Hii 2700 tunatoa wapi? You opened with 0, you've produced 24,000. That's what I can see as actual production. So the goods available for sale is 24,000, but I can see units sold were 21. Oh, 21,300, not 23, but 21,300. Sorry for that. So this can give us 2,700 that you have provided. Thank you for that. Good. So 2,700 as the closing stock. And now we said they are valued at the production cost per unit. So what are we getting? 2,700 by 1,800. 48,60,000. So we less 48,60,000. That is 4,860,000. Good. So when we less this, we'll be able to get cost of sales. What is our cost of sales? Cost of sales should be now here. Cost of sales ni ngapi? 43. But something is exaggerated here. Anyway, let's proceed. Hii 1,800 mnatoa wapi? Jameni. We are doing marginal costing, and this is the marginal production cost per unit. It is all the variable production costs. Direct material, direct labor, variable production overhead. When we add the 3, we are getting 1,800. The second income statement will be doing absorption costing. We'll be using 2250. So 1,800 you multiply by the quantity produced. 1,800 multiplied by the closing units. 38,340,000. So can we get our contribution margin or gross contribution? Can we get our gross contribution? 68,160. Uh-huh. 68,160 to the gross contribution, we need to less variable non-production cost. Less variable non-production costs. So which one is the first variable non-production cost? As per the question, variable non-production cost. If I look at the question, do we have that? Additional information number 1. Are the budgeted costs during the period in relation to the selling and distribution and administration were as follows. So we have selling and distribution, 10% of sales is variable. Then the fixed one is 9 million. Admin, the fixed one is 12,300. And those are budgeted. You must move forward and look at the question. Do we have actual? That must be taken care of. But let's start with the variable and production cost. The first one is selling and distribution. So the selling and distribution here, we are told is 10% of sales. How much is 10% of sales? How much is 10% of sales? So it is 10% of 106,500,000. 106,500,000. That is 10,650. Thank you. Good. Then, do we have any other variable cost? Do we have any other variable and production cost? We don't have. That is the only variable, non-production cost. So once we less that, we'll get what we call net contribution. So net contribution ni ngapi? 68,160 minus 10,650. And let us do that very fast, please. I want to end this class when we are done with this question. Remember, next class, we must introduce topic number 8. So imagine going to topic number 8 and leaving you with this burden here. Tuchangamke, 57,510. That is our net contribution. To the net contribution, we now less fixed costs. One of the fixed costs we are going to deduct here is the fixed actual fixed production overhead or fixed production cost. Fixed production overhead. Do we have actual fixed production overheads? What of admin? Tunakuja hapo. Do we have variable admin? Do we have variable admin costs? Do we have variable admin costs? Yes or no, please? No. And we have just covered the variable. So admin cost cannot be there. If it is fixed, it will fall under this part. So relax. Great. So go to actual fixed production overheads. Tuko nayo kweli? Fixed production overheads. Information number 3. Actual fixed production overheads were 300,000 less than absorbed fixed production overheads. I just love what this examiner did. Ukifanya hivyo, everyone is left behind. The first thing, can you first of all get this absorbed fixed production overhead? So assignment number 1, can we get overhead absorption rate or the fixed production overhead absorption rate is equal to budgeted fixed production overheads. Do we have budgeted fixed production overheads? Do we have actual fixed production overheads? Do we have the fixed production overheads? People are still lost. I want you to take fixed overheads given in the budget, the standard fixed production overheads as 0. Look at it, 0.5 hours, right? At shillings at 900 per hour. That is step number 1. Now, this is the budgeted 0.5 shillings, 0.5 hours at 900 shillings per hour. Then information number 5, we are being told Meta Limited uses an expected activity level of 24,000 direct labor hours to compute the predetermined overhead rates. The predetermined overhead rates is this overhead absorption rate. Right? Good. So total budgeted hours is 24,000. Total budgeted hours is 24,000. And do we have the total costs? It is 0.5 hours at the rate of or 900 shillings per hour. Not per hour, but per an hour. So it means per hour we are going to have 450? 0.5 shillings at 0.5 hours is what we need to produce 1 unit. But the labor rate per hour is 900 shillings. And we have 24,000 hours. So to multiply by 900, that is option 1. or we have 0.5 hours, 0.5 hours per unit. So what is the budgeted quantity? That's what you need to get. 1 unit is equal to 0.5. So budgeted quantity will be how much? Already someone is lost. Somebody is wondering, what is this man telling us here? What is this man telling us here? So let us come for those who are lost. We are given 0.5 hours per unit of the finished product. Put that aside. Then we are told that labor rate is 900 shillings per hour. The budgeted labor hours is 24,000 hours. What is the budgeted labor cost? It is 900 shillings per hour, but we have 24,000 hours, the budgeted hours. So deal with this first. Deal with that first. What are you getting? I want you to give me the answer for this one first. 900 times 24,000. Tunapata ngapi? Somebody, 21,600,000. Have you been able to understand how we are getting this part? Are we okay with this first part? So this is part A, or option A. Are we okay with A? Are we okay with A? In that question, we are told it is 0.5 hours per unit of the finished product. The last information is telling us the budgeted activity level is 24,000 hours. The labor rate is 900 shillings per hour as per the budget. 900 shillings per hour, and the budgeted hours is 24,000. In other words, the overhead absorption rate, if it was based on labor hours, overhead absorption rate is equal to shillings 900 per hour. Do we have actual hours or overheads absorbed? So the budgeted hours, already we have overheads. It is 900 shillings per hour is equal to budgeted fixed production overheads over budgeted activity level, which happened to be labor hours, 24,000. How do we get budgeted fixed production overheads? You cross multiply. So it is 900 times 24,000. That is if it was based on labor hours. Tumeelewana hapo? Are we together now? Where does 0.5 hours go, or we ignore it? Someone is not understanding me. Can we first of all focus on this other side, then we get to 0.5. That 0.5 is part B. Can we clear part A, then we go to B, please? That part B will address this 0.5. That 0.5 will be addressed by part B. So this is if we take labor hours, right? It is 900 shillings per hour. So it means activity level will be the budgeted labor hours of 24,000 hours. Now, let us get to B. In part B, we are told that it is 0.5 hours per unit. 1 unit, 1 budgeted unit. The company budgeted utilizing 0.5 hours. So 0.5 hours is equal to 1 unit. 0.5 hours is equal to 1 unit. And for us to produce 1 unit, we need 0.5 hours. And the labor rate is 900 shillings per hour. The labor rate is 900 shillings if we use 1 hour, but we only need 0.5 hours. Right? 0.5 hours, which means if we are to go by shillings, then the labor cost per unit will be how much? The labor cost per unit? A unit requires 0.5 hours, right? So we have 0.5 hours, and we have said 1 hour is equal to 900 shillings, and we have 0.5 hours. How much will we have? It is that 450 that has been given in the question. Are you able to see it? It is that 450. So 1 unit will be 450 shillings, the budgeted labor cost. So when you now take the 450 shillings per unit times budgeted units, do we have budgeted quantity? Do we have budgeted quantity by the examiner? Do we have budgeted quantity? Budgeted production, do we have that? Budgeted production? That is actual. The one you're giving me is actual production. Do we have budgeted production? Do we have budgeted production? No. Guess what? The company budgeted to utilize 24,000 labor hours. 24,000 labor hours. And as per their budget, 1 unit is equal to 0.5 hours. So 24,000 will be equivalent to how many units? 24,000 hours will be equivalent to how many? To how many? So 24,000 hours, right, times 1 unit over 0.5 hours. What will we have as the budgeted units? What will we have as the budgeted units? Budgeted units? 48,000. 48,000. A unit, as per their budget, 1 unit is equal to how many? How much? 450. 0.5 hours is for 1 unit. And the labor rate is 900 shillings per hour. So it means 1 unit requires 450. When you take now the 48,000 units, budgeted units of 48,000 times the 450 shillings per unit, what will be your budgeted labor cost? Are you getting back to 21,600,000? Are you getting back to 21,600,000? Yeah. Option B, option A. Which one should we take to proceed with our workings? Should we stick to A or use B? The examiner said that the company uses predetermined or uses labor hours to get predetermined rates. Uses labor hours to get predetermined rates. So that's why we rule this out. This one here is giving us the answer yes, but it uses the units. Option A is using the labor hours, which we have been told is the cost driver, a concept from topic number 4. A concept from topic number 4. So don't confuse these things. Right? So, do we have overhead absorption rate? The fixed overhead absorption rate per unit, do we have that? Actually, per hour, now that is based on hours, we are doing this based on hours. The fixed overhead absorption rate per hour, do we have that? If yes, how much is it? Shillings per hour. Per labor hour. How much is it? The fixed production overheads absorption rate per direct labor hour. Do we have it? Do we have it? Do you have it? If you give me 450, you are letting me down. 450 is the shillings per unit. So if the overheads were being absorbed based on the number of units, we could have said it is 450 shillings per unit. The examiner said they are absorbed based on labor hours. What is the labor rate per hour? That is the fixed production overhead per unit. It is 900 shillings. We need to get overheads absorbed. They have talked about overheads absorbed. So the overheads absorbed is equal to overhead absorption rate multiplied by actual activity level or actual hours. Do we have actual labor hours? Do we have actual labor hours? Do we have actual labor hours? Actual, not budgeted, actual. Do we have actual labor hours? How do you get that as the actual? How do you get that as the actual? Somebody, how do you get that as the actual? Actual. Okay, how do you get that as the actual? Please don't let me down. Please don't let me down. After all that explanation, please don't let me down. Don't let me down. It will be heartbreaking when you let me down at this point. It will be really heartbreaking if you decide to let me down at this point. Actual. Actual fixed production overheads. Actual fixed production overheads. 1 unit, 0.5 hours. Therefore, 24,000 units will be, so 1 unit, 0.5. That will be 12,000. So when you take the 12,000, so we have, times actual hours. We don't have the actual hours. But now overhead per unit is 450 per unit. Then you multiply by actual units, 24,000. That is the total overhead. So that is how much? 450 by 24,000. 450 by 24,000. What are you getting? 10,800,000. That is option 1. Somebody is telling us, we look at the units. So each unit was taking 0.5, and we have 24,000 units. So it means if I have to get back to this real one, it is 24,000 units will give us 12,000 actual hours. Okay, 12,000 actual hours. Then you multiply by overhead absorption rate based on hours. It is 900 shillings per hour. Right? It is 900 shillings per hour. So what will you have when you take 900 by 12,000? Will it give you the same thing? 900 by 12,000, will it give you the same thing? So 10,800,000. I'm still interested in actual fixed production overheads. This is just the overheads absorbed. The examiner is telling you something there, which I want you to listen to carefully. The actual fixed production overheads was 300,000 shillings less than absorbed. This is the absorbed, but actual is less than that by 300,000. What is our actual fixed production overheads? Thank you, 𝗔𝗃𝗫𝗫𝗫. 10,500 or 10,500,000. From the actual fixed production overheads, let us now go to actual. Actual selling and distribution. Then you go to actual admin costs. So actual selling and distribution, somebody? Actual selling and distribution. Actual selling and distribution. So the actual or the budgeted fixed selling and distribution overheads were 50,000 less than the actual. Right? The budgeted. So I can see the budgeted is the budgeted selling and distribution. I can see it is 9 million. So this 9 million is less than the actual by 50,000, which means the actual is 9 million and 50,000. Then the last one, the actual admin cost. The actual admin cost, is it affected in any way? Actual admin cost. Admin cost, the examiner is silent about the actual admin costs. So if the examiner is silent about that, what do? We said you assume that budgeted is equivalent to actual, and therefore you take 12,300,000. Can you give me your net profit as per marginal costing? The examiner was silent about the actual admin cost. So if the examiner is silent, we take budgeted as the actual. But for the two, the examiner has told us the direction to take. So that's why we are actually doing that. So we have 25,660,000. 25,660,000. That is net profit. 25,660,000. 25,660,000. Good. So I think that is done. That is done. That is done. We have like 3 minutes. Cannot be enough to do the entire thing. So we will talk about absorption costing. So under absorption costing, we have the sales. Our sales is still 106. 106. $106,500,000. Then you go to cost of sales. Opening stock. Then we add the production. Then closing stock. So remember, we only have one duration. So there's nothing like closing stock here being opening stock. No, it's just one duration. So opening stock was 0. Production, the company produced 24,000 units and each was produced at a cost of, under absorption costing, the production cost is 2250, right? Then closing stock, the company had 2700 units at a cost of 2250. Somebody should be giving me those figures if we could manage, but of course I can see our time is not enough to do that. So maybe you could take that 24,000 times 2250 minus 2700 times 2250, right? So that will give you the closing stock. Then whatever you'll be getting here, you'll deduct from there to get an adjusted profit. To the unadjusted profit, you need to give us something. Number one, actual fixed production overheads. So the actual fixed production overheads is 10,500,000. 10,500,000. Then overheads absorbed, the fixed production overheads absorbed, I can see we had 10,500,000. So 10,800,000. So 10,800,000. The actual is 10,500,000. The absorbed is 10,800,000. There is over absorption by 300,000. When you absorb more expenses, the profit will be reduced. So we add back the over absorption. So bring in that 300,000 and add it, the 300,000. Then from there, you come to less variable sales and distribution, which already we have here. Variable non-production cost, the sales and distribution, 10,650,000, 10,650,000 with less. Oh, our term is what? Is it over or under? The real expense is 10,500,000. The absorbed is 10,800,000. You absorbed more. You exaggerated the expense. So how do we get back? You add back the over. Then you bring actual selling. So less fixed costs. Number one, we have actual selling, which is 90,50,000. Sorry for that, but I have to just give you this. Then actual admin costs of 12,300,000. Yeah. When you less that, you'll be able to get net profit. You'll be able to get net profit as per absorption costing. So allow me to post the figures there for you to be part of this recording, which you can refer to after this class. Or if you have the figures, you can give me the figures very fast. Very fast. So this will be 54 million. Then I need to take 2,700 by 2,250 to give me 6075. That is -1. So that is so that will give me 58,575,000. Unadjusted profit. Then we add the 300,000 to give me adjusted profit, of course. Then we less 10,650,000. Then we less 90,50,000. Then we less 12,300,000. That will give us 26,875,000. So this 26,875 is not equal to 25,660. You now bring in the reconciliation statement. So if I leave you with that as an assignment, see equals how? If I leave you the reconciliation statement as an assignment, that will definitely be okay, because you give us net profit as per marginal, which is 25,660,000. So this 25,660 marginal, we don't have opening, but we have closing. So there is understatement of closing. What are we supposed to do to the understatement of closing? We add under statement of closing stock. Understatement of closing stock should be added. So what is our closing stock? 2,700 units. What is the fixed production cost per unit? 450. That is what is understated. That is the understatement. So when you take 2,700 times 450, it gives us 1215. It gives us 12,15,000. So 12,15,000, when it is now added to this one here, 12,15,000, when it is now added to 25,660,000, it will give us 26,875,000. So that's our profit as per absorption. That is the reconciliation. That is the reconciliation. That is the reconciliation statement. That's how we reconcile it. Remember, we don't have opening stock. We could have deducted less understatement of opening stock. But since opening stock is not there, that is a 0. Then closing is the understatement, 12,15. It is that fixed production overhead, which is not included there, times the closing quantity will give us the understatement value. So this profit as per absorption is adjusted when we do reconciliation to reconcile this difference. Sorry for taking your 6 minutes, but that marks the end of topic number 7. It is done and dusted. When we meet on Friday, topic number 8. Thanks for your time. Have a blessed night, and let's meet on Friday.